we have the chief economics commentator for the Wall Street Journal, Greg Ip, joining us from Washington now. Greg, we appreciate the time again. As Britons now head to the polls to vote either for or against, as it's known, Brexit, what are the pros and cons that they are weighing for themselves?
It comes really down to economics versus sovereignty. The economic arguments are basically that Britain, as part of the European Union, enjoys this extraordinary access to one of the largest economic areas in the world with virtually no barriers to doing business across borders. The sovereignty arguments come down to this. Ever since Britain joined the European Union in 1973, the EU's bureaucratic apparatus has grown, and that means a lot of British laws are now overridden by what happens in Brussels. And there's a lot of Brits who, for a long time, have just chafed at that loss of sovereignty. More recently, that has actually been superseded by an even bigger concern, which is immigration. As a member of the EU, Britain must actually accept as many immigrants from other EU countries as want to live there. And nowadays, as you see here in the United States, there's just a lot of resistance to having those immigrants coming in. Those will be the big issues that are weighed today in voters' minds. And
so, again, a financial issue, perhaps as opposed to emotional ones as much as anything. Britain, though, the U.S.'s biggest asset to free trade. It is the portal through which the U.S. does so much of its business. But with a leaving then of the EU, all the trade deals negotiated would go away. In fact, we saw President Obama on a visit there say that if this came to pass, that Britain would head to the back of the queue with regard to those deals. What impact exactly would the Brexit have on the U.S.?
Well, the direct impact is likely small. Britain, as an export destination for the United States, is quite small, the seventh largest trading partner. It is true that there are a lot of American investments in Britain and a lot of British investments in the United States, but none of that changes the day after a Brexit vote. This is not like Lehman Brothers going bankrupt or Greece defaulting on its debts. There are no contracts that are torn up. Nobody defaults on anything. The British pound will not suddenly be replaced by a different currency. What you will have instead is basically a curtain of uncertainty over the economy, which will be depressing but not catastrophic.
Well, a curtain of uncertainty is something I cannot imagine the global markets would like. What impact there?
You'll probably see, if Britain votes to leave, you'll see the British pound weaken. You'll probably see the dollar strengthen, government bond yields go down as people seek safety, and stock markets weaken. But again, I think some of the more negative prognostications of a financial panic and a recession might be a little bit exaggerated. The sad fact is that we have been dealing with this sort of uncertainty year in and year out now for 7 or 8 years, whether it's over our debt ceiling standoff in 2011, the fiscal cliff, the endless negotiations over Greece. It's just one more big headwind. Remember, as the correspondent was saying a minute ago, the European Union is the most successful free trade area in history. 28 countries have joined since 1957. None have left. This could be a watershed moment in which we are seeing a serious erosion of globalization, which has developed many long-term benefits to global economies. In my view, that is the biggest significance of this vote.
Again, so much more than economics in the going to the polls. It is underway, and we'll have it for you. Greg Ip, we appreciate your time this morning.
Thanks for having me.